Hello, this is Kirill from forexboat.com and welcome back to the course on Forex trading. Today we'll be conducting our next trade on our real live Forex account. So today we'll be trading the Australian dollar, Canadian dollar 1 hourly time frame. And I'd like to mention that the Australian dollar, Canadian dollar currency pair is quite interesting because it consists of two commodity currencies. The commodity currencies on the Forex market are the Australian dollar, Canadian dollar, and New Zealand dollar, and they're called such because the economies of the respective countries heavily depend on commodities such as grain, timber, oil, natural gas, and so on. And so the movements of these currencies are often dictated by and correlated with the movements of those commodities. So trading the Australian dollar, Canadian dollar has its own specifics, and it's quite interesting in times. So I think this will be a good example to kind of illustrate what other currencies they are that currency pairs they are that don't involve the American dollar. So as you can see on this account, we already now have $595.81. If we go to the account history, we can see our two profitable trades from previously. And what we're going to do today is we're going to conduct our third. So on this chart, I have highlighted some things, and right away you can see that the Australian dollar, Canadian dollar currency pair has recently been in a channel. So the currency started bouncing around in this shorter channel, and then the channel expanded, and that sometimes happens, and so the lower boundary became the middle line of the channel, and now the currency has been bouncing in here for a couple of days, actually since Christmas. So now we're in January 2015. Happy New Year, by the way. And so we're going to conduct this trade now. One more thing, if we zoom out, we can see that generally speaking, it is a downward trend. So what's happening right now is a retracement, and we should be very careful when trading these because the currency can turn around at any point in time. So that's why we're going to trade quite conservatively, setting our take profit not even at the very end of the top border of the channel, but rather around this high that we had seen previously over here. Also, what you will see is that there's a level here, 0.96. So I'll just point it out here. Just above the blue line, there's a level 0.96. And that level is quite strong, a quite strong resistance level, as you can see here, here. Traders are generally afraid of it, so I'm quite skeptical about the price crossing this level. So we're definitely going to set our take profit below that level. So we've got the take profit set. Well, we will set the take profit here. We'll enter at market price, and the stop loss. Well, the stop loss I chose to set just below the 0.95 level because the 0.95 level is quite a strong support level, and we can use it to protect our investments, so include it in our strategy, and expect if the price does go down, then it might bounce back off around the 0.95 mark. And that level has proven, like you can see here and around these areas here, you can see that level has proven to be quite strong when the price comes towards it. So without further ado, let's move on to calculating the risk, and then we can open the order. For calculating the risk, we will need to know stop loss in pips. So here we have approximately 73 pips for our stop loss. So I'll just bring up the slides from that we're familiar with. So we need to take the risk in dollar terms and divide by 10 times stop loss in pips. So in our case, we want the risk in dollar terms to be approximately 10% of the balance, and that's because we're taking a very short trade. We're not going to ask for a big movement, and it is quite a good signal, even though it is in the counter trend movement, but at the same time, we are headed towards the top of that channel. So 10% of 595.81 is approximately $60. So we put that into the formula, and now we can also plug in our stop loss in pips, which was approximately 73 pips. And now if we calculate that, I'll just bring up the calculator here. So 60 divided by 10 times 73 makes it 0.08 lots. So that's good. Now we can exit this presentation. Screen pops up, and so we'll type in 0.08 lots. Stop loss is 0.9480. Take profit 0.9590. Comment my third Forex order, and instant execution. We want to create a buy order. Everything's ready, just double check very quickly. Currency pair is correct. Click buy, and voila, the order is ready. 0.08 lots. If we go into the trade tab over here, we can see that the order is up over there, and right now we're in a bit of a minus, and that's because of the spread. So we'll leave it at that and check back in hopefully maybe today. So these vertical lines, these are period separators. That means a new day according to server time. So maybe today, maybe the day after, hopefully we'll get a result, and hopefully we'll get a take profit on this order. I look forward to seeing you in the next tutorial. Until next time, happy trading.